All right, today we are going deep inside the mind of a true Wall Street legend, Michael Steinhardt. And we're not just going to look at his incredible track record. We're going to look at the core philosophy, the engine that drove all of it. And maybe more importantly, the intense psychological strength it took to pull it off, a strategy he famously called variant perception. And this quote from the man himself, it just cuts right to the chase, doesn't it? This isn't about financial models or who has the fanciest MBA. He's talking about courage. Think about that. The pure psychological grit it takes to stand completely alone while this massive global machine, the market, is screaming at you, telling you that you are fundamentally totally wrong. That's the real battle we're going to explore. Exactly. And if you really want to understand Steinhardt's biggest home runs and his most gut-wrenching losses, you first have to get a handle on this one core idea. It's the philosophy he built his entire career on. He called it variant perception. Now, this is not just about being a contrarian for the sake of it, just betting against the crowd because it feels edgy. The key phrase here is well-founded. This requires an insane amount of deep dive analysis to come up with a view that isn't just different, but is actually smarter, for reasons nobody else sees yet. Yeah, that's the whole game. It's the difference between having disciplined conviction and just, blindly buying what's cheap. You have to believe you're right for reasons the market is missing, which, let me tell you, is an incredibly lonely place to be. And that loneliness brings us right to this point. You see, the market gives you constant feedback every second of the day. And when your view is the opposite of the consensus, that feedback is just relentlessly negative. The price is moving against you, your clients are getting nervous. The real fight isn't just with the numbers on the screen, it's this internal war against your own doubt, your own fear, and that very human need to just be told you're on the right track. So let's see how this all played out in the real world. We're going to rewind to 1981 for what is probably Steinhardt's most famous and most audacious trade ever, a massive all-in bet on treasury bonds. Okay, you have to understand the mood at the time. It was pure pessimism. You had runaway inflation just eating away at everything. Treasury rates were already at a staggering 16%. And the most famous economist on the street, a guy nicknamed Dr. Doom, was telling everyone rates were going to go even higher. Bonds were so hated, people were literally calling them certificates of confiscation. And that was the environment Steinhardt decided to bet against. And the pressure, it wasn't just some abstract market force. It was personal. It was immediate. As you can see from this quote from his book, his own investors were calling him, and they were furious. Think about it. They gave their money to a stock picker, and here he is betting the entire firm on the bond market, a place where he had zero track record. People were pulling their money out, so he was fighting the market and his own clients at the same time. And here's where you really see the scale of this thing. At the time, his firm had about $75 million. He put $50 million of that in and then borrowed another $200 million to make a $250 million bet on bonds. This one single position, leveraged more than 3-to-1, became his entire portfolio. It was a total all-in bet the farm move. And boom, when the market finally cracked, he made $40 million almost overnight. But what's really telling is what he wrote about it later. He talked about the deep sense of satisfaction. It wasn't just about the money. It was the incredible feeling of being proven right, of having his lonely, variant perception totally vindicated after months of just withstanding that extreme psychological pressure. All right, now for another classic example that shows a totally different side of this philosophy. Let's go back a little further to the early 1970s and the legendary Nifty 50 stock bubble. So back then, Wall Street was obsessed with these so-called one-decision stocks, big blue chips like Sears that you could supposedly buy and hold forever no matter what the price was. This created this huge gap in valuations. You'd have a beloved stock like Sears trading at 30 times its earnings, while some overlooked value stock was sitting there at 8 times. Steinhardt's variant perception was brutally simple. Price always matters. But, and this is a huge but, being early when you're shorting a stock is one of the most painful things you can go through in finance. He was betting against the best companies in America, and for a whole year, he was losing money. The stocks just kept going up. His firm was underperforming, which he said created considerable tension and plenty of sleepless nights. This is the ultimate gut check for a contrarian. But then, the bubble popped. In fiscal 74, the S&P 500 just got obliterated, down 38%. But Steinhardt Partners, because they stuck to their guns on those shorts, was up 34%.
It was an absolutely massive win that really put them on the map, and it was earned by gritting their teeth through that whole year of pain.
But look, having the right idea is only half the job. You still have to act on it. And that brings us to the 1987 crash, where Steinhardt tells a much more painful story, a story about a failure of his own conviction. This timeline is just incredible. In April of '87, a full 6 months before the crash, Steinhardt actually wrote to his investors and basically said a crash was coming. He saw it plain as day. But then, as the summer went on and the market just kept ripping higher, he said he succumbed to the reigning complacency. The pressure to keep up was just too much. So when Black Monday hit on October 19th, he got caught and pretty much the entire year's profits were wiped out in a day. And this is such a critical lesson. His perception, his analysis was perfect. He saw the freight train coming down the tracks. But the psychological pressure to perform, that fear of falling behind in a euphoric market, it led to what he called a failure of nerve. He won the intellectual battle, but lost the psychological one. So you have to ask yourself, where does this incredible appetite for risk, this psychological intensity, even come from? Well, to understand that, you really have to look at the very complicated relationship he had with his own father. And this question is something Steinhardt really wrestled with his whole life. Was his career this sophisticated, intellectual pursuit? Or was it just a much more successful version of the same gambling addiction that defined his father? This comparison from his book just lays it all out. His father, Saul "Red" Steinhardt, was an emotional, addictive gambler who bet on pure chance. Michael called his father's life a financial fiasco. But Michael, he channeled that same risk-taking impulse into a fiercely intellectual and analytical system. He was always hunting for a non-random edge, an angle nobody else saw. The approach was totally different, and so was the result, one of the best track records in Wall Street history. And Steinhardt is just brutally honest about this connection. He admits right here that he absolutely inherited his father's love for the rush. He suspects that the speculative joy he felt was, psychologically, the exact same thing. The crucial difference was that he wrapped that impulse in a rigorous, disciplined, information-based process. He basically took his father's addiction and weaponized it into his own professional methodology. But living this way, it comes at a huge psychological price. This burden of absolute returns means you have to win constantly. As he puts it, I had an overriding need to win every day. And when you think like that, your performance becomes completely tied up with your own sense of self-worth. Over time, he felt the highs from winning started to fade, but the lows from losing just became devastating. It's a relentless war that requires enormous courage and an almost inhuman ability to endure pain. And really, in the end, that's the question Steinhardt's entire career leaves us with. And it applies to so much more than just finance. In any field, in any part of life, what does it really take to develop a truly independent, well-reasoned point of view, and then find the inner strength to bet on it when everyone around you is telling you you're crazy?